Welcome to Drill on Earnings. We have quarterly results from SNAP. It's an interesting quarter from this company that the stock goes crazy when these numbers go out. Up a lot, down a lot. What happened this time? Let's take a look at the business story as well as the stock on the move. I'm Cory Johnson, Chief Market Strategist from the Epistrophy Capital Research. And earnings for the third quarter in this company, Wall Street likes a beat or a miss. But let's dig into the actual numbers here. They were a little bit better than Wall Street expected, but I'm going to call them basically in line. $1.4 billion in revenues. Daily active users increased 9% year over year to 443 million. But we're going to dig into those numbers a little deeper and look where that growth actually happened. They like to talk about adjusted EBITDA because they don't have any EBIT. They don't have any earnings and any net income at all. They adjust things, they look okay, but their losses did get a little bit better. So overall, right, we had 15% increase in revenues on a year-over-year basis, which is pretty good for this business that isn't growing users too much. They lost only 11%, which is to say they lost $1.11 on every dollar of income, but that's the best they've had in as far as recent, I think ever actually. And maybe more importantly, they had free cash flow, $72 million. So free cash flow in 3 out of 4 quarters will keep you in business, and these guys need to keep in business because they're not showing profits yet. The user growth was interesting because in the US, it has been flat and flat and flat. Well, it's really been down and flat and flat and flat. So they went from 101 million users a year ago to 100 million users for the entirety of the last 4 quarters in the US. But globally, they've added 9%. Well, where has it happened? It's happened a little bit in Europe, but the rest of the world, outside of North America and outside of Europe, they've seen 16% year-over-year growth. So they've got well over 2.5 times the users in places outside of Europe and North America than they have in Europe and North America. But when you look at how much they charge for advertising those places, it's a completely different story. They charge over 8 times what they earn in the US for an advertiser. An advertiser right now is paying on average $8.54 to reach a Snapchat user at Snap. But the rest of the world, only $1.09 in US dollars. Well, how did the stock react? The stock went up a lot, up 10% in after-hours trading. But that's nothing compared to what we've seen over the course of this last year. When first quarter results, or I should say fourth quarter of last year results came out, stock went from about $18 a share to about $11 a share. Next quarterly results they have coming out after their March quarter, stock shot straight up, going from about 10 to 18 again. Another quarter later, stock goes from 17 to 14 to 10. Now this quarter, 10 to 11, 10% seems like a big move, but not for Snapchat, or not for Snap Incorporated, I should say. Now, within the business, right under the hood, what's happening here? They've introduced a new advertising type that shows a lot of promise here. It's called Simple Snap. It's a 10-second video, never longer than 10 seconds, and the audio automatically plays, unlike some Snapchat ads. And it's been very successful where it's been tested. The question is, where are they going to roll the thing out? Maybe they should just rush ahead and get this thing out there because advertisers seem to like it, or do they? Well, the company sounds like it's going to be a little cautious in this. Here's Evan Spiegel, the CEO, talking about the maybe slower rollout that some bullish investors might have hoped for.
We're still early in the journey on understanding the monetization dynamics and some of those inventory shifts, and how that could impact revenue. We certainly want to take the time to work through those sorts of changes and make sure advertisers and our partners, for example, are prepared for those sorts of changes. So all that to say, I think it's pretty early right now, and while we are excited about some of the engagement shifts we've seen with new and less engaged users, we're going to take our time to really understand the monetization dynamics.
So you want a Simple Snap in a hurry? Instead, you're going to get a Simple Snap. He's going to take our time. Not our time, but Snapchat's time is going to take their time. But what's it all mean? What's our big drill on earnings takeaway, and what's one number that tells us a whole lot? Let's get to that. So Snapchat, or Snap, reporting Q3 earnings, the company behind Snapchat. Your essential summary tells you've got $1.373 million in revenues in the quarter. I'm going to call that 1.4, and that's 15% better than the previous year, which is really good. And that's on the heels of raising rates for advertisers, or advertisers paying more at least, and growing users outside of the US. And their losses got better. They still lost 11%, negative 11% operating margins, or net income margins, I should say. But the one number that tells us a whole lot is 10%, because the stock only moved 10% up in this case after earnings swings of well over 50% in every one of the last 3 quarters. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson.